If we look back to when MicroStrategy began this journey, which was around August of 2020, and we look at the performance of all major asset classes since that time period, Bitcoin's up about 140%. The S&P index is up maybe 25%. The NASDAQ is up in the teens, actually maybe even less. Gold is like a plus 1%. Silver's been down, it's lost money, and bonds have lost even more. So Bitcoin is the best performing asset since then. It is actually showing the promise of an inflation hedge and a store of value.
In a recent interview with Michelle McCory of Kiko, Saylor, executive chairman of Microstrategy, talked about his predictions regarding the likelihood that the biggest cryptocurrency in the world will be widely adopted by institutions. Since August 2021, when his software company began buying Bitcoin, it has been the first publicly traded corporation to have the digital currency on its balance sheet. He is one of the most prominent Bitcoin supporters. Saylor claimed that the reason for his resignation as CEO of Microstrategy last year was so that he could fully focus on the Bitcoin business. Microstrategy has built up its holdings of Bitcoin since its initial $250 million purchase, and it currently owns about 140,000. The greatest stockpile held by a publicly traded firm is held by Microstrategy, with Marathon's 10,054 Bitcoin holdings holding the second highest hoard. The financial sheets of 21 additional publicly traded firms, excluding Microstrategy and Marathon, include Bitcoin. Among them are businesses from a variety of nations, including the United States, Canada, Japan, Hong Kong, Australia, Norway, Denmark, United Kingdom, and Thailand. According to Saylor, more publicly traded corporations are sitting on the sidelines, waiting to invest in Bitcoin and protect their businesses from the continual and rapid devaluation of fiat currencies, and the numerous counterparty risks involved with stocks. They are being hindered, though, by a few things. In his conversation with McCrory, Michael mentioned three of these factors: unfair and obligatory accounting procedures, investors' confusion of Bitcoin with other cryptoassets, the majority of which are securities, and the growing regulatory crackdown on the industry by U.S. regulators.
So Bitcoin is the best performing asset since then. It is actually showing the promise of an inflation hedge and a store of value. It has achieved that kind of performance in a volatile fashion, but even on a Sharpe ratio basis, it's outperforming alternatives. And I guess the best alternative right now is really the S&P index, which requires that you take equity risk. The world wants a hard commodity money, but the second best commodity is gold, and it's just not standing up to Bitcoin at this point in time. And the weaker commodities like silver, soybeans, oil, timber, they just don't work, because when the price goes up, you can make more of it. And of course, if you can't use a commodity, you got to go to a security. And if you go to a security, you've got counterparty risk, because securities have issuers. And so Bitcoin is filling this void. It's the asset without an issuer. It is not just a commodity, but a scarcity. It's capped. And I think that's why it's outperforming all these other assets over this time period. Well, I guess we've gone from MicroStrategy being the first to there being 24 or 24. So I think going from 0 before we got into the market to 24 right now shows some promise for something which is completely new in the history of the human race. It doesn't surprise me. The reason it's challenging is a couple of factors. One is the accounting. The accounting was indefinite and intangible, and if I had to boil that down, that's toxic. If I wanted you not to buy an asset, I would make it indefinite and intangible accounting, because what that means is you always have to write it down, but you can never write it up, which means that you will never, ever, ever have an investment gain on an asset with that kind of accounting. It had that accounting because it was a new, novel, scary, not understood thing that no one used. And so the accounting industry took the most conservative view they could take, and perhaps that was reasonable in the 2014 timeframe or 2017. We're moving toward fair value accounting right now, and I think the first milestone we'll have to get over is we'll have to go to fair value accounting before a publicly traded GAAP reporting company can reasonably get enthusiastic about large sums of this asset. I think the second thing holding it back is crypto confusion. A lot of people had a hard time distinguishing between Bitcoin and FTX and FTT token and Terra and Luna token, and is that a stable coin, and all these other crypto assets. That got to peak confusion about a year ago when all the crypto companies bought out all the Super Bowl ads.
Yeah.
And for the last 12 months, there's been this crackdown, meltdown rationalization where every single one of these wildcat crypto companies has been going bankrupt, and all of their air tokens have been crashing, and then everyone promoting the air tokens is getting sued for pumping unregistered securities. Now that's a very expensive, like multi-$100 billion educational lesson for the marketplace and the media. Until we actually get assured clear distance, some amount of distance from that crypto crackdown, I think that conservative CFOs will be a little bit careful there. I think that the silver lining there is Bitcoin's credibility has been enhanced in the past 12 to 24 months, because all of the bankruptcies of the other crypto companies have illustrated economically why they are not assets without an issuer. If there was no issuer, there'd be no one to go bankrupt, right? So the bankruptcies have been demonstrative, and that has forced the regulators, both in the CFTC and the SEC and the like, to point out that Bitcoin is a commodity, and that has required millions, if not tens of millions of people to understand the difference or learn the difference between a commodity and a security. Bitcoin's asset class, or its classification as a commodity, properly understood and broadly understood by the entire investment community, is kind of the second chasm we have to cross. The third chasm is the entire crypto industry right now is under pressure and crackdown from the regulators, and there's a lot of pressure on crypto exchanges, cryptocurrencies, crypto assets, securities. And until that's resolved and you see Bitcoin trading on regulated exchanges that have been endorsed by the SEC or by the regulators, I think there are a lot of conservative investors that will just stand off and wait. The way you'll know that happened is when the SEC approves a Bitcoin spot ETF. That's kind of an indicator that they've decided that they endorse the exchanges trading the asset. And they've never liked the fact that the asset Bitcoin is cross-collateralized and cross-traded with other crypto assets. The idea that Do Kwon could issue $60 billion of Luna and then issue $20 billion of UST and then buy $4 billion of Bitcoin backed by $60 billion of an air token and then wash trade it right on an unregistered exchange without surveillance. That has been a bother. That has been really offensive for regulators. So when the crypto industry gets cleaned up and when the investing public is educated and when the accounting is normalized, I think you'll see more conservative CFOs start to look at this as an asset they can allocate to in size. I think the regulators are of the opinion that they don't want billions of dollars of U.S. currency to circulate in dark pools in such a way that they evade the controls of the banking system, the KYC, the AML controls, and they don't want to be used for sanctions evasion. And for that reason, stable coins are a problem for them, and I don't think they're going to change their view. I think they've also decided that many, if not most of the crypto tokens are securities, and they're unregistered securities being manipulated by the issuer in an unethical fashion, and they don't have full disclosure, and therefore they're violating securities laws. And I think their opinion of those two things has strengthened in the past 12 months. I think the meltdown of FTX was a catalytic event that caused the regulators to decide that crypto exchanges, crypto securities, and cryptocurrencies that imitate the dollar are not really consistent with a stable world financial system, and they're going to take actions to shut that down everywhere in the world. I don't think anywhere in the world that's going to be tolerated. I think it's just a matter of time as to how long it'll take for that to be wound down. Well, Bitcoin is the one universally acknowledged digital commodity in the world, and it is backed by a Bitcoin mining network, which represents digital power. So Bitcoin itself represents the world's most secure database, and the Bitcoin network represents the world's most secure computer network. So my message to Washington would be, if you want to take advantage of the world's most secure database and a fault-tolerant military-grade communications network, then you would want to embrace Bitcoin.
Michael Saylor claims that when people eventually understand that Bitcoin is the best form of hard currency, this is exactly what will happen. A financial asset without an issuer, a global digital money available 24/7, and a limited supply, rare commodity. What do you think about Saylor's interview and his opinion of the elements that would make Bitcoin more appealing to institutions? Please share your thoughts and views in the space provided below. Don't forget to express your support for Bitcoin on June 6th in the Standards Board survey. This might be a major turning moment for Bitcoin and other digital assets. Make sure to like our video, subscribe to the channel, and enable post alerts if you want to see more content like this. Thank you for watching.